Welcome everybody, Doug McKay, Anti-Wall Street Guy on the 3rd of June 2011. Closed today on the S&P at 1300. Right on the nose. We did mention that at some point, here we are in 525 in the posts, that we expect to print 1300. That happened today. We also mentioned that until we get above, again, this is assuming that everything stops here, or very close to here, until we get above, let's say 1342, 1344, 1343 in that range, which essentially would be the high that was put in on 218 over here, we would be short this market or in cash. Now, earlier in the week on Tuesday, we had an increase in volume. We had a close above the 50-day moving average. We had a close above the downward sloping trend line here. We also had a close above the 20 and the 30-day moving average with volume. So all things were a signal to get long the market again. We eliminated almost all, but not all, of our short position and put the rest of the cash back to work on the long side. For the first time in many, many months, if not years, the trend lasted less than a matter of hours. Less than a day. So we had to get out of the majority of the longs, increase the short side, and basically just do a 180. So as it stands right now, the overall trend for the 5th Friday in a row doing this video is neutral to down. Neutral meaning if you don't want to short it, have some cash and or cash and a short position. I do expect a bounce here, as you can see by the post we put out on the 2nd. I thought we would open up lower this morning, take out the stops here, potentially the stops here, just under 1294, and then finish higher. That did not happen. We finished near the lows for the day. I do anticipate a rally next week, but I also think that that is just going to be basically, some shorts covering their positions and then to get short again. So I do believe we'll probably get a bounce maybe to 1320, 1330. But until we get above this 1340, we would be short to neutral to short on this market. Again, we do have a low here that we haven't taken out yet. That's 1294 on the S&P that was put in on 418. Just like 1300 was a target on the S&P, I also believe 1294 is. If we look at this and we pull it up on a monthly chart on the SPY, let's take a look at a monthly right now on the SPY where the candles are months. We can see that this trend line since the low that was put in mid-March 2009 is still intact. So the overall trend long term is still intact. But what we don't want to do in the event that this continues to roll over is take this down to the 200-day moving average and take it down to this trend line, which is 1250, which I believe that if we break the lows on the S&P, and let's go back to an S&P chart on a daily basis. If we break the lows here, certainly of 1294, then the next target would be that 1250, 1260 area down here, because there's a lot of space here that could be filled. So for right now, based on what we can see technically, I think we're going to see lower highs and lower lows. Now, that's not to say that we won't be going through the same thing that we went through last year at this time, where we're kind of going sideways all summer, early fall, and then we break out to a multi-year high. That could happen. We could end the year at 1650 on the S&P, 1400, 1500. We don't know. We could also finish at 960, 760s. But for right now, looking at it on a daily chart, which is how we trade this market, it is certainly down as far as the trend goes. Gold is still doing well. Silver is not. If we take a look at a chart of gold, very similar to what we did on the S&P on a monthly basis, we can see obviously that the trend is still intact. When we look at it on a daily basis, let's take a look at it here on a daily basis. We would want to hold definitely this 145 level here. I think if we break 145, which is just below the 50-day moving average, Then we're going to test 142 and probably go back and test this area here. But for right now, the chart on GLD looks good. I would like to see us get above, on a close, above the high that we put in back on 6/1, which was Wednesday. Then it definitely looks like we're going to challenge this high that we put in here. Then it's just a matter of whether or not it's a double top. The dollar is getting whacked again. We did have a buy on the buck once we got above this trend line. Possibly we're doing a 1-2 here. One double, kind of a 2, 3, and up. But it's too early to say. It looks like we're going to test this double bottom. We did put a chart out. Let's take a look at this on a weekly basis. Here's the verbiage here. I said we're okay on the buck provided the euro stays, meaning the FXE, under 144.90. However, big strength in the euro over the last 2 days has pushed us above this area of resistance. So right now the buck is weak. For me right now, you guys, I think the best place to be is in cash and or short with a position in gold. Have your stops fairly tight. If you're shorting the market right now and you're using the SH, let's pull this up on a daily chart. We'd want to have our stops pretty close, just under the lows that we put in on Wednesday, moving our stop from here, if you have SH, to here. All right, that's it, you guys. Doug McKay, antiwallstreetguy.com. Again, on the 3rd of June, 2011, the overall trend is down, short to neutral. We'll see you next week. Thanks.